Hello, good morning, trade pros. Welcome to our morning market update for Thursday, December the 11th. Good morning to Michael. Good morning to King Kong, Marco, and Strita Salsa. That's a pretty nice name. And yeah, hi guys. Let me just set things up really quick. My battery might die on my phone, which would then mean that we would just have to turn around anyways, but I don't mind swiveling on my chair, so let's swivel away. I don't get why this happens, to be honest with you guys. MMU update. Okay, here we are. All right, welcome to our morning market update. There's a lot to kind of cover in today's session. I got a lot of notes. Let's get it started. Obviously, we're going to talk about the Fed. We're going to talk about Oracle crapping the bed and how that impacted the market and what it actually means, because it's an interesting takeaway, and we got to get all that done. Briefer and shorter today because I got to open up the trading room. Victorio is going to be away for the day. So this morning, despite the rally from the Fed, futures are down and red. S&P, NASDAQ, everything is down. Tech's leading the way on the way down on Oracle's big miss of revenue. All right, rates, the 10 years at 4.14 on the 10-year USD Treasuries. Dollar is flat after yesterday's post-FOMC slump. The dollar did give up a lot of gains as equities rallied. We'll talk about that in a second. Commodities, oil's down, gold's down, copper's up 0.7%. And in crypto space, Bitcoin's down 2.3%, Ethereum down 4.1%. So after a good start to assets, because everything was up yesterday post-Fed except the US dollar, things have sort of reversed. And do you remember we talked about that yesterday? We're going to get into that a little bit more. All right, first thing, and the first driver in today, Oracle implosion hits tech. Everything was going good. Oracle's down 11% pre-market after missing on revenue, and it didn't even miss on revenue that big. It's like I think 16.8 was expected, 16.1 is what came in. But when you have that much leverage, when you have that much of people's money, when you have that much growth promises, when the expectations are so great, you can't miss. A miss becomes a lot more painful than a company who, let's say, expectations weren't that great. So think about this, $16.1 billion of generated revenue, and you lost 10% of your company's value. You could see where we're going with this. Yes, maybe it's an overshoot on the sell side on Oracle, but yeah, this just amplifies the AI and tech issues leading into the last couple weeks. All right, jobless claims this morning were up on the radar as well. They came out at 236,000 versus 222,000. So softer labor market. This actually helps the Fed be a little more dovish. It's an instant report on the jobs market right the day after the Fed, and it supports what they were saying. So softer report is actually slightly more helpful toward the Fed being dovish. So yeah, that it's not a good report for the economy, but its expectation leads to, or contributes to expectation of having more support from the Fed. The next thing is, let's talk about the Fed. All right, they cut 25 basis points. We said it was probably never going to be anything but that. Anytime the market expectation is above 70%, the cut happens. So we get the cut, 25 basis points. All right, it's a 9-3 split. So the dissent was 3 people. 2 of the Fed voters wanted no cut, and 1 wanted 50 basis points. So if you take the 1 and say, he's not really a dissenter because he got what he wanted, just not enough of it. There are only 2 dissenters. It's not too bad. It's not even as more of a split Fed as we had thought it would be. Okay, so that's a good news thing. All right. And during the press conference, Jerome Powell continued to support a dovish cut. We thought it'd be hawkish. It's a dovish cut. That's a good for the market. All right. He gave no strong signal about January cuts, though. He acknowledged inflation still too high and labor market is softening. Then we get this report this morning that confirms that, highlighted rising productivity, and said he avoided sounding hawkish. He gave both sides something to latch on to, but it was, look, Powell delivered on the message, and he delivered on his promise and the goal of what he's supposed to do. He was dovish, and the market had the exact reaction we expected. Remember, we talked about 2 things yesterday. One is, don't trade the initial burst of news, trade the pullback to it. I'll show you in a minute the chart how that trade worked to the T if you wanted to do it. And then remember also that everything that gets gained or lost up until the close of the trade gets reversed overnight. We got help from Oracle, but the reversal happened. The Fed pop and excitement got faded down back into pretty much we're below where the Fed announcement came in. All right. Next I want to talk to you is Hassett, who's currently at the NEC, the head of the NEC, and the front runner for the Fed role in May. All right. He said the Fed has room to cut more and could justify 50 basis points and more after. So this is somebody who's not taking office till 5 months from now talking about cuts. All right. Where before, just last week in the interview, he was saying, oh, well, my job starts in 5 months or the new Fed chair starts in 5 months. How are we supposed to know what it's going to look like in 5 months? Data dependent is what he was trying to say. He got a talking to and very quickly changed his message that there should be more cuts. So you already know what's happening here. All right. He also confirmed that Trump will pick a new Fed chair in 1 to 2 weeks. This is what Hassett did. You know, it's going to be him, guys. Like, come on. You don't have to read between the lines too much. All right. On the macro tone, equities are under pressure. Dollar's kind of stabilizing after the sell-off yesterday. And why are markets down? Oracle led to, it's a shock to have that much money and to have that much expectation and to miss on revenue. You can't miss on revenue. That's a bad sign. So weakness in tech, that's a drag down there. NASDAQ's weak. Oracle's weak. Down we go. FOSM was dovish, but it was kind of overruled by the tone of Oracle, and we're going to talk about what that means in a second. And yeah, that's the takeaway for today. Yeah, this was the cool takeaway I wrote down. I wrote that today is a tech sentiment day, not a macro day. So what we're going to be watching throughout the session today in the trading room is how tech develops. Obviously, we're going to watch Oracle. That's a really big one. We're also going to hinge and pin on the Mag 7, which has kind of recovered a lot of the post-market losses and pre-market today. I'm going to turn around. Let's talk a little bit more and get on the charts. And hey guys, my bad. I was talking, but you guys probably didn't see anything because the mic was muted on that screen. Those are two 45-inch monitors, Alex, stacked on top of each other. Maybe excessive, maybe not. I don't know. And good morning, Jake Alru. I should not be muted at the moment. I'm seeing a lag from what you guys type, about 40 seconds. Good old Google. We're good, right? Okay, yeah. But by the time you said it, the feed was late, and I saw you late as well. Anyways, let's let's get on the charts, and let's talk a little bit more about today's session and what we could actually do. So yesterday at 2 p.m., here was the actual announcement. Now, what I like to do personally on announcements like this is when we get down to 2 p.m., find it. Okay, this is the price action here. I like to draw a line, okay, and call this, I like blue for my news lines, and I'm going to make it really wide. This might shock you. Oh, I hate the trackpad. All right. That's kind of the pre-Fed news event, first of all. Okay, I leave a line on my chart like that just jumps out at me a little bit too much, but for at least a day or two after the Fed. So that's a pre-Fed announcement. So we come in, all right, and wait, was that it? I swear it was lower. Well, that was it. Okay, so around 2 o'clock, okay, we got a little rally, and I think it actually, look, I don't use time-based charts. I use price action, so yeah, it's somewhere in between here. Anyways, we rally out of the gate. We pull back. We rally. We pull back again on the Fed. Both these are buyable. Strong rally into the close, and we give up a little bit of the gains for a pullback to close to 68.92. All right. We got the initial move. We got the retest twice and the extension upward. The trade was golden on the Fed news. I don't trade Fed news anymore, and I don't want to ever again. But there was a tradable opportunity within the news event itself. All right, we rallied upwards to test the high from December 5th, and we actually broke it and went above it by 3 points. So you can see this move higher. It's 3 points higher than this one. Before it, so we managed to take out and sweep the high to put in a very bearish or bullish looking structure. All right, but then we gave up some of the gains to close. Okay, that's normal. That would have been great if we were trading around the 88 today, 90. Maybe even a little more downside. We'd be pretty bullish. But if this hadn't happened, this big drop leaves a mark on the chart. All right, I know we're back up at the top, but it's not the same as if this drop didn't happen, even though we've recouped the price action. All right, and so now we're looking at this, and we gave up some of the gains, but we gave up a lot. We had a 49.2 gain, 49.25 point gain on the ES, and Oracle crapped the bet on revenue and dropped, and we pushed below yesterday's open. All right, so the market is clearly telling us it's scared more of AI and tech growth. This entire AI bubble discussion that's been going on to end the year. The fears are still there. The jitters are still there. The market has just revealed that to us. And it's more afraid of that than it is optimistic about the Fed. So we've instantly shrugged off the Fed thing, even though it was a big announcement. And we're going back to AI fears and jitters. And so what you got to watch is AI stocks this morning, because what relieves fear in a market like that? Buying of AI-related stocks. You see long position, you see strength there, you're in a good position for the day. So that's what we're anchoring to in today's session. All right, we're smack dab in the middle of a big range that started December 3rd. You could see this. All right. The 68 levels, my flip zone, were this yellow box. We're above it, so I am looking bullish at the moment. We get below it, I'm looking bearish, but we're in the middle of a big range. So what I'm looking for today is to play the order flow patterns instead of the price action. Because if you were to play the price action, you have a higher high and a lower low within hours apart from each other. Both news event driven. And if you have an event driven higher high and event driven lower low, and you're in the middle of a range, you technically don't have anything, all right, until you go up 30 points or you go down 30 points. So you basically just shouldn't do anything today. But instead of that, I'm looking to play the order flow patterns instead. And I'm looking to still go long above 68 and be bearish below 68. That's my flip zone. But I'm looking for support from order flow, because now I think we're going to get some bigger trades, smarter money to reveal themselves now that the Fed is over. And now that we have this AI worry and concern, we're going to find out who the strong-handed participant is. All you got to do is look at the order flow in today's session. You don't have to look at price levels. You don't have to anticipate anything. You don't have to know what level to buy at or sell at today. It's not going to be readable like a book like that today, the marketplace. What you're going to need to read is the strength of the real-time transaction and tie your boat to that and go for a ride. All right, that's what I got for today. For you guys, I hope you enjoyed it. I will see you tomorrow, and check us out at TRADEPROacademy.com. We have awesome stuff coming. January is going to be a big year. Some really big announcements are coming down the pipe. You definitely do not want to miss. So I will see you guys inside the trading room. Love y'all, and thank you for tuning in. Take care. Have a great day. Bye.